Hi, I'm Eric Kazatsky, Head of Municipal Strategy here at Bloomberg Intelligence.
And I'm Karen Altamirano, Senior Associate with Bloomberg Intelligence.
Welcome to our latest video on what's going on in the muni market. And obviously, it's just a rate story once again. I feel like we've been sort of on repeat the last several weeks, but it's really what's been dominating the marketplace. The latest economic news coming out today was pretty strong. We had a GDP print that came in much stronger than expected, and the knee-jerk reaction from the market was a rally in Treasuries. The thought process here being that a lot of people are looking at that print and thinking that risk of a recession is completely off the table at this point. Call us a little bit skeptical, but we're not completely sold on that front just yet. On the muni front, things remain largely unchanged. So what that is translated to is, munis looking much cheaper on a relative basis as ratios have continued to sort of creep wider. One thing that's more interesting, I think, is what's going on the trading volume front, and that's something that Karen's been keeping an eye on in the charts.
Yeah, on the volume front, one chart we like to look at is the bids wanted volume trades. We're seeing a sharp increase in volume in recent months, reaching an all-time high today. It's also worth pointing out, since sometimes we're asked by clients whether spikes in trade data could be attributed to small odd lots coming out of retail. But we could also take a look at the bids wanted trade data by par amount using the ticker MBWDPAR, which is also showing the same spike, signaling there's large block trades happening here as well. Some of that spike is due to rates being so high, but we can also attribute it to the tax loss swapping season that's already underway and the opportunity of resetting book yields.
Yeah, I mean, it seems like that tax loss swapping season has really been the entirety of 2023 and just sort of picking up more steam right now. Something that we looked at in our month ahead look for the November index report is really the opportunity set when it comes to municipals compared to, let's say, corporates or treasuries. And to do that, we're really looking on an after-tax yield equivalency basis. And in this following chart here, what we're seeing right now is that with muni rates being as high as they are, the yield pickup compared to corporates, and we looked at single A muni revenue bonds compared to single A corporates, they're in excess of 400 basis points at this point. So, if you're on the fence about buying munis, we think that the case is extremely compelling right now, and we're actually hoping that that translates into positive fund flows. I think one thing that's actually happening over the last week and a half that we didn't see previously is that equities are officially sort of crossed over into that bear market area. So, as people sell equities or they avoid putting money to work in the equity market, they're going to be looking for haven assets, and hopefully with the way that munis look on a tax equivalency yield basis right now, they're going to get a look from people who weren't considering them before. So for now, thanks for tuning in, and we'll talk to you next week.
Thanks.